This Thursday, the United States Senate will hold a vote that could permanently change how 50 million Americans invest their money. Bitcoin just crossed $80,000. Coinbase stock jumped 7% in a single day. Something massive is coming, and most people have no idea what it is. For over a decade, crypto has existed in a legal gray zone in America. Nobody knew if Bitcoin was a security, a commodity, or something else entirely. That confusion cost investors billions, killed companies, and pushed the entire industry offshore. The Clarity Act changes all of that. It passed the House with overwhelming bipartisan support in July 2025, 294 to 134, and now the Senate votes on Thursday, May 14th. It would finally define what every crypto token is under US law, who regulates it, and what rules apply. Here's something remarkable. Markets didn't wait for the vote. Bitcoin surged 19% in a single month, outperforming even the S&P 500's 10% return over the same period, purely on expectations this bill passes. JPMorgan analysts called passage a positive catalyst, predicting markets could surge in the second half of 2026 in a move similar to when Bitcoin ETFs were approved in January 2024, but bigger, because this covers the entire digital asset ecosystem. This isn't speculation. Wall Street is already positioning. But here's the war nobody is covering. This bill isn't just about crypto. It's about who controls the future of money in America. Right now, if you hold stablecoins, dollar-backed digital tokens, on platforms like Coinbase, you can earn 4 to 5% interest. Banks are furious. They say this pulls deposits away from the traditional banking system and threatens financial stability. The entire Clarity Act comes down to one question that has nothing to do with blockchain: can banks and crypto firms agree on whether a stablecoin balance should earn interest? Banks have been lobbying hard this week to kill the bill at the last minute. And there's a ticking political clock nobody is mentioning. If this bill doesn't pass by May or June, midterm election dynamics consume all of Congress's time, and the bill is likely dead for years. Democrats could take back the House in November. Many oppose the bill, saying it's too weak on money laundering. The bill needs 60 votes in the Senate, meaning at least 7 Democrats must cross the aisle. Right now that's not guaranteed. Miss this window, and America loses the digital economy race to Europe and Asia. Forever. Thursday, May 14th. 4 days away. $2.4 trillion crypto market on the line. Banks versus the future of money. And the most consequential financial vote of 2026 that barely anyone is talking about. Now you know. Subscribe to The Economic Order, because the real news is always in the details.